Say under what? This
You
we're
said
discussing about each candlesticks. You know these candlesticks here. Let me refresh my chart here. So we are going to be discussing these candlesticks you're saying because each candlestick has names and how they work. So I'm going to be explaining about these candlesticks, the names, and what you're looking for before you enter for a buy position and what you're looking for before you enter for a sell position. So there's what I'll be discussing about.
okay, sorry, what I'm
So
asking, is it like the candlestick, is it like the topic for today or is under a topic? That's what I'm asking.
okay, yeah, it's the topic for today. Yeah, yeah, it's the topic of today. So let me go back to the previous where I wrote the candlestick patterns. I can't find it again. So we'll have to just continue like this. Candlestick patterns, we'll have different kind of candlestick patterns. We'll have the hammer, we'll have the doji. Okay, first of all, I'm going to explain how this candlestick and how you can identify them and how you can read them. Okay, let me use a triangle form. Okay, let's say this is the body of a candlestick pattern, and this is the wick of a candlestick. So candlesticks always have some wicks on them. So this is called a wick. This is called the wick candle. This is called a wick, and this is open price for the selling. This is an open price, and this is a close price for the buyers. This is an open price. This is a close price here. So this is called the body of a candlestick. This is called the body. I will have two. I will have two type of candlesticks. We have the red. I'll have the green candlesticks. So I'm going to be showing you examples with the charts as well. We have this is called the body of a candlestick. So markets always give a week before the body candlesticks. Let me take you to the chart here. So how to identify this now? This is a week of a candlestick. This is called a wick. This is the wick which I circled there, which this is called a wick candlestick. So this is the body of the candlestick. This is the body of the candlestick. It's called the body. So this is the wick. Price always give us a wick then before continuations. And we'll have different type of candlestick patterns. We have different kind of candlestick. We have the hammer, we have the doji, we have the engulfing. I'm going to writing them down one after the other for you so that you can. Hope you guys are taking note of it.
Are you not going? Yes, yes, you are taking note.
Okay. So I will have different parts type of candlestick patterns. We have the type of candlestick patterns. Let me write them down. Type of candlestick patterns. Number one, we have the hammer candlestick. Number one, we have the hammer candlestick. Number two, we have the dodgy candlestick. Number three, we have the engulfing. of the engulfing candlestick. Number 4, I'm going to be showing you this in the chat as well. So first of all, I will write it down for you guys to take notes. Then I will take you guys and show you one after the other in the chat. This is number 4. We have the morning star. Have the morning star. Yeah, number 5. Have the evening star. Then number 7. Okay, sorry, number 6. We have the mariposa. Now, understand. So we have the hammer, we have the dodgy, we have the engulfing, we have the morning star, evening star, mariposa candlestick, and so more of them. So first of all, I'll be showing you this. Okay, the 7th one. Let me add a shooting star. Because I make use of this candlestick patterns I'm showing you. These are the candlestick patterns I make use of in trading, whether to buy or to sell, to confirm my analysis as well. So I'll be showing you these candlestick patterns in the chart and what they are used for. A hammer candlestick is used to determine for the buy signals. So if you see a hammer at a resistance zone, because I make use of a support and resistance strategy. So if you see a hammer as a support zone, so it's telling you that the price is about to reverse. So you can take a buy position targeting the next high. Then if you see a dodgy candlestick, which is the second one there, which means an indecisive, neither the buyers or the sellers are in the market. So I'll be showing you with example. Let me be taking with example here. In the chat. Okay, let me take this down so that I'll have to take it. The dodgy, the hammer, engulfing, morning star, evening star, mariposa candlestick, the shooting star. Okay, let's go to the charts. Okay, on this particular trade, on this particular chart, to determine a dodgy candlestick, this is it. Let me circle it for you. This is a dodgy candlestick here. Indecisive, neither the buyers or the sellers are in the market. This is a dodgy. This is another dodgy. So this one candlestick without no wick. This is it. Just a weak candlestick, doesn't have a body, but the body is very, very small. This is it. It's called a dodgy candlestick pattern. This is it. Indecisive, neither the buyers or the sellers are in the market. So the next candlestick will determine the direction of the price for the dodgy. This is a dodgy candlestick. This is how you can identify them in the price in the market. This is a dodgy candlestick as well. This is a dodgy candlestick. This have a small body here and then long wick. It always have a very small body and a long wick. This is a hammer candlestick pattern. This is a hammer. It's like the normal hammer that we always know. This is it, hammer candlestick. Let me write it down. This is a dodgy. This is dodgy. An indecisive price. Neither the buyers or the sellers are in the market. So the next candlestick after a dodgy candlestick will show you the direction of price, whether it's going up or down. That is when you can make a clear decision of the price. But a hammer candlestick, once you see a hammer candlestick form at your support level, look to buy because price is about to reject. And how you can identify this hammer candlesticks, I just showed you one here. This is it. It has a long wick. It's like the normal hammer that we always know. Let me write it out. Let me show you another clear hammer. So this is a dodgy. This is a dodgy that we always know. This is a dodgy. Then this is inverted hammer. This is another hammer. Look at this. This is a hammer, like the hammer that we usually know to hit the nail. There's you can see it in the price. Let me circle it out here. This is a hammer. Only that green candlestick, only the green candlestick. That is hammer. How to identify the hammer in the market. So this is a hammer. This is a hammer. Uh, this is a hammer candlestick here. So price is trying to form a hammer candlestick also here at a very resistant zone. At a very resistant zone. So okay.
Hello,
Hope you
Sam.
guys can
Yes.
identify a hammer. Hope you guys are understanding what I'm talking about. Hope you can identify a doji. A doji candlestick is an indecisive price. Neither the sellers or the buyers are in the market. So the next candlestick that will follow it will determine the price, whether the price is going up or going down. And if it's going up, you just determine to buy. Don't think of a sell opportunity. So what you'll be thinking about is to buy that particular price. And if you are selling, if the price is going down, what you'll be looking at is a sell opportunity. Don't think of a buy, so that you'll be having a double mind in the when you are trading. So this is a hammer candlestick.
Mamugo. Mamugo. Mamugo.
This is a hammer candlestick. It's like the normal hammer that we know for hitting. Only this red candlestick. This is a hammer. So the price of the color of the hammer doesn't really matter at all, whether it's red or green. So what you're actually looking at, your support zone. I'm still going to teach you guys how to analyze using a support zone and resistance zone. But then actually I make use of. So this is a hammer, and then this is an evening star candlestick. Sorry, a morning star candlestick.
Hello, Sam.
Comprises of 3 candlestick patterns.
Hey, Sam.
Yeah.
Could you please mute the other guys so that the recording is clean and that we listen to you?
All right. Please, let's all mute our mic. Please, let's all mute our mics.
There is that option in your Zoom. You can just mute them remotely.
You said?
Zoom has that option. As a host, you can mute them remotely from your laptop.
Yeah, let me check it out. Let me check if I can. I think everyone here is muted. Okay, so let's continue. This candlestick is a morning star candlestick pattern. It comprises of 3 candlesticks. So a hammer is comprises of 1 candlestick. A doji is comprises of a single candlestick pattern. While the morning star candlestick is comprises of 3 candlestick patterns. We have the bearish, and we have a doji or a hammer. Then the next one is a bullish candlestick. So when you see a morning star candlestick, it's actually telling you that price is about to reject to the upside. So price is about to buy. You can look to buy when you see a monster candlestick patterns at your key levels. Understand? You need to see this at your key levels. There's when it's at more. So it comprises of 3 different candlestick patterns. This is it. Morning star candlestick patterns. So you know how to identify this in the chart. At least you can know how to identify. If you can identify up to 4 to 5 candlestick patterns in the chart, you can use it to make profitable trades. So that's why I'm showing you the candlestick patterns, how it works as well. So this is a morning star candlestick. It's a morning star candlesticks. So it determines, it shows a buy signals. The time is showing you that the price is about to reject. The bias is about to enter the price. So you can look to buy instead of selling. And if you see an evening star candlestick, it's just an opposite of a morning star candlestick pattern. That is showing for the sellers. While morning star is showing for the buyers. Evening star is showing for the sellers. So let me show you evening star. It's just an opposite of a morning star candlestick. This is it, a bullish, a dodgy, and a red candlestick pattern. Let me circle this out. This is an evening star candlestick. This is it, a bullish candlestick, a dodgy, and a red candlestick pattern comprises of same three. It's just an opposite of the morning star. Opposite of the morning star. Let me show you more examples of the evening star here. This is it. This is it. Comprises of three different candlestick patterns. This is it. An evening star. A green, which is the bullish. A dodgy candlestick comprises of whether the green color or the red color. Then we have a bearish pattern. So to confirm this, you can see immediately it appears here. What happened? Price started shooting down. It appears on a resistance zone here, which is causing the price to shoot down. So immediately you see this evening star candlesticks. It's trying to give you a signal that the sellers are in the market trying to push the price down. This is evening star candlestick. This is evening star. So the current evening star showing that the sellers are in the market. The sellers are about to take charge, pushing the market down. So once you see an evening star at a key level, what you need to do is to sell the price. Then we have engulfing as well. So engulfing candlestick, we have this is an engulfing candlestick. This is an engulfing candlestick. This green color and the red color. So this is a bearish engulfing candlestick. We have different type of engulfing candlestick. We have the bullish engulfing candlestick and we have the bearish engulfing candlesticks. So this is a bearish engulfing candlestick because it's shooting the price down. And looking at this, how to identify it in the price, the green color, the red color needs to swallow the green color. There is take charge of the green color. You need to swallow it like this now. This green color, the red color swallow this green color. This is how you can identify an engulfing. And when you look to buy, when you see an engulfing candlestick, what you have to do is to mark out the green candlestick there. So once you mark out that green candlestick, drag it. If you drag it, you can see immediately the price approaches to test that same zone. What happened? It gave us an evening star candlestick that pushed the price down. So at a key level, you always see the price candlestick. So that's why you need to at least master if it's 4 to 5 candlestick patterns that you can identify in the market. So at a key level, you can say this. Once you see an engulfing candlestick, what happened? What you need to do is to mark out that green candlestick that you just swallow. Price needs to go back to that exact location, exact green candlestick before shooting down. So once you see price approaching, what happened? Price first test the first one and then push down. Come back again, test it. What happened? When testing it, it gave us an evening star candlestick. As it gave us this evening star candlestick, what happened? Price started shooting back down. So immediately, if to say you are familiar with the evening star candlesticks and you enter a trade, immediately you sight this evening star candlesticks, what will happen? Your stop loss will be above this engulfing candlestick pattern here. And then you have to target, I target about 2 ratio. So you have to take 2 ratio of this So what will happen? Price will eventually goes down to your way. Look at this. So price will eventually goes down to your way and then take out your TP without even going much up again. Because after an evening star candlestick, you look to sell. Evening star candlestick is a sell signal. And if you notice bearish engulfing, this is a bearish engulfing here. It's also a sell signal. So what you have to see, once you see a bearish engulfing, what you have to do, that evening star, that green candlestick there, you have to mark it out using a rectangle. As you mark it out, you have to allow the price to get back to that zone. Once you get back to that zone, what will happen? Price will start to give you a candlestick pattern that maybe you are familiar with, and then start shooting down. Let me write it down. Engulfing candlestick. Engulfing. Bearish engulfing. Sorry, let me change it to bearish engulfing. It's a bearish. Bearish engulfing. This for the bearish. So engulfing candlestick, you need to wait for two candlestick to form. And that two candlestick, you need to make sure that the green candlestick that is formed, the red candlestick that is following it, need to swallow it up. If you swallow it up, there's when you can identify it as a correct engulfing candlestick. What you have to do, use your rectangle tools, mark out the green candlestick there. Once you mark out your green candlestick, so what you have to do is to wait for your entry when price will get to go back to that exact zone. Because what's the mistake that most of the newbies do is that they don't know how to identify this correction in the price and the market, and they don't know when to enter. So once they can see this now, this is also called a Mariposa candlestick. Some people will be like, okay, price is selling, it's not going to retrace back, not knowing that once price sell, anything that goes down, it definitely goes back up. You see that? So no matter how the price one day it will still go back up. So you have to wait for that price at that exact zone. So you see this price gave us a Mariposa candlestick. This is a Mariposa candlestick without no wick at all, giving us this two as an engulfing candlestick. So it pulls back down and then give us a small candlestick, give us a hammer candlestick. And once you see this hammer candlestick, it shows that the buyers are in the market. Buyers are about to take over. So the buyers push the price back to this zone, and then the sellers took over, rejected. This is a rejection here. And then the buyers took again, came back here, give us an evening star candlestick that push the price down. You see that? So this is for the bearish engulfing candlesticks. You can see this as a bearish engulfing candlestick. So price initially give us a green candlestick and a red candlestick, went back down. So this is a dodgy candlestick. This is a massive rejection here. It's called the wick. It's called the wick. So I'll go to the bullish engulfing. Let me show you how to identify the bullish engulfing candlestick. If you notice, these two candlesticks, a bullish engulfing candlestick. Let me mark it out. These two candlesticks. Let me show you this. That's circles. There's this two candlestick pattern here. This two candlestick. Let me use this second. Now let's get this second. To have the second. But I hope you guys are seeing what I'm talking about as the engulfing. See this red candlestick and the green candlesticks. So a bullish engulfing candlestick, the green candlestick need to swallow the red candlestick pattern. So let me show you another one here. Hope you all can identify a morning star. So it is an evening star here. Goes back down. There's a morning star that pulls the price off of it. Okay. Clear one. Clear one. Something like this. This one appeared at a resistance level here. So resistance level is a place where price. What I will teach you guys so this one appeared in a resistance level here, and then we notice this red candlestick here. The green candlestick swallow the red candlestick pattern. So as it swallowed it, what happened? Price came back again, gave us a bearish move that the price is going to go down. And then it appears here a doji candlestick that pulls the price up. It's a Mariposa candlestick. Yeah, this is a good engulfing candlestick pattern here. So price appeared and we swallowed the price and then started moving up. And this is a Mariposa candlestick. If I haven't shown you the Mariposa candlestick, this is it here. Let me see what that is. This is a Mariposa candlestick. It's made up of a single candlestick. It's made up of a single candlestick. Only this. So once you see a Mariposa candlestick, a single candlestick without no wick. So there are no wick on Mariposa candlestick. It will either give us a small wick or no wick at all. So those candlestick that doesn't have wick at all, when looking at the price, those are called the Mariposa candlestick. The Mariposa. The Mariposa candlestick. This is the Mariposa candlestick. So hope we are understanding what I'm talking about. Hope we are driving. This is a Mariposa candlestick that is pushing the price up. But how many of us have downloaded the MT5? I said we should download.
I did.
Okay. Have you signed in with the SNS broker? Because with MT5, you have to get a broker, or have a broker that we're trading with. So I'm trading with SNS broker. That's why I sent you the SNS link to register and then create a broker account. After you create a broker account, then you take the login for the broker because we have a real account and we have a demo account. So depending on the one you want to create, if you want to create a real account, you can create it in the broker there. If you want to create a demo account, you can also create it in the broker there. So after you have created this, after you have created your account, I'm going to show you how to connect it to your MT5. So you put a demo money there. You deposit the demo money. There's a demo money. So there's not a real money if you want to practice. So you deposit a demo money, and then that demo money is used for practice, not depositing your own money. So that one is a demo money, then it's used for practice. Unless you want to create a real account where you can deposit your own real account, but you have to go through some verifications. So after you have verified your account, that's when you can deposit and then trade in your real account. Same thing, use the login, go to your MT5 and login. So this is a Mariposa candlestick, a bullish Mariposa candlestick, because we have a bearish Mariposa and a bullish Mariposa candlestick. So this is a bullish Mariposa candlestick joining with this, showing us a bullish engulfing, which is a bearish engulfing. It's a bullish engulfing. So immediately this engulfing appeared, what's happened? Price push them to this low, and then give us an engulfing also with a Mariposa candlestick that push the price up. So immediately you see a Mariposa candlestick, what you need to do is to buy. That's why the price wasn't able to come back to this low, because it appears with a Mariposa candlestick. And immediately a Mariposa candlestick appear, what happened? Price continue shooting up without retesting. So whenever you see a Mariposa candlestick, what you have to do is to buy immediately, because price might not retest the way you want it to retest. So that is for the Mariposa candlestick. So And then we have the shooting star. The shooting star there is opposite of hammer, is for the bearish. Immediately you see a shooting star at the resistance zone. This is my resistance zone. So where price always reject from, whenever price comes to this particular zone that I mark out, I analyze using the daily time frame. So whenever price get to this zone, what will happen? It will push back down. Whenever it appears to this zone, it will push back down. So it came here, it appeared the first time, give us an engulfing candlestick that pushed the price down. Came back the second time again. This is a shooting star, which is opposite of a hammer. Immediately you see it, our price will continue selling. So what happened once the shooting star appeared and price sold immediately? What happened again? Price tried to test that same zone for the third time. What happened? And gave us an evening star candlestick that still returned the price down. So whenever you see this candlestick, they always work at a key level. So, and that key level, you need to analyze it well. Me, I analyze this in the daily time frame, come back to the 4 hours time frame, and then use the 15 minutes time frame to trade, watch charts, and then trade analysis in the daily time frame. So I'll be showing you the time frames and how they work, the time frames and how they work. Okay, this is it. Okay, these are the time frames here. I don't know if you can see me. So I mark out the 15 minutes time frame, the 30 minutes time frame, the 1 hour time frame, the 4 hours time frame, and the daily time frame. So because I'm a day trader, we have different type of traders. We have the swing trader, we have the day traders, and then we have the scalpers. So swing traders are the ones that leave their trade at least in 2 days, 3 days, or they can leave it in a week, they can leave it in a month. So those ones are swinging. Why me? I'm a day trader. I trade within a day, so I make use of the daily time, then goes back to the 4 hours time frame. Then I trade with the 15 minutes time frame. Then we have the other ones, the scalper. So I trade within a day, so I can buy and sell within a day. So after that day, I'm out. So we have the scalpers. Those scalpers, they are the ones that trade with the 5 minutes frame. So they don't have patience to wait for price throughout the day. So they can buy and sell within 30 minutes. They are out of the market. Within 1 hour, they're out of the market. So they buy and sell within short time. While we, the day traders, I buy and sell within a day. So I can hold a trade from morning to evening. Then I'll step out of the market if the price didn't get to 1 TP level. So I will have the swingers. Those ones are the people that leave their trade within 2 days, 3 days, 1 week. So they can still hold a particular trade for a month. So those ones are the swingers. So and they make use of the weekly time frame. You can see it here. We have the weekly time frame. They make use of the monthly time frame. They make use of the weekly time frame, daily time frame, 4 hours time frame, and then they can execute their trade using the 1 hour time frame. While we, the day traders, we execute our trade using the 15 minutes time frame or the 30 minutes time frame. While the scalpers, they execute their trade using the 1 minute time frame or the 5 minutes time frame. So you can see the way I analyze it. I pick out my 15 minutes time frame, pick out 30 minutes time frame, pick out 1 hour time frame, pick out 4 hours time frame, and pick out a day time frame. So in this now, I'm going to delete this my previous drawing, and then I'm going to show you how to use this how to analyze the markets using each time frame. So each time frame determines the time each price is going to take before the market close. So if you look at this previous chart here, if you look at the current chart, I don't know if you can see my mouse, my cursor. So you see the time that is remaining for this price to close. We have 8 minutes here, 8 minutes and 23 seconds for each this candlestick to close. So this candlestick can open and close within 15 minutes. So if I go to the 30 minutes time frame, each candlestick can open and close within 30 minutes. If I go to the 1 hour time frame, that means I have to wait for 1 hour for each candlestick to close. Then before I can determine what to do, whether to buy or sell. So that one you have to be very, very patient. So that is what the swingers use. So we have the 4 hours time frame. Each candlestick represents 4 hour. Each candlestick will take 4 hours to close. If you look at this here, you see this is remaining 2 hours, 22 minutes, and then 40 seconds for this candlestick to close. You see that? So, and then this is a day. So each candlestick here is 1 day. Each candlestick here is 1 day. Each candlestick here is 1 day. It represents 1 day. And as a daily trader, I make use of the 1 day to analyze my price. So how I analyze the price, there's what I'm still going to show you guys. Hope you guys are with a drawing material or a writing material, or hope most of you are recording this, because this is how I trade. So if you want to record, you can record. Maybe you can go through it later. Or if you want to, if you have the writing material, you can write. So it's the same thing. All right, let's start. So I'm trading using the daily time frame, analyzing using the daily time frame. First of all, before you analyze, you have to determine the market structure, whether the price is going up or price is going down. So those are the, or price is going sideways. So those are the three type of market structures that we have. We have the market structure. We have the market structures. So we have the number one. Number one, we have the uptrend. Number two, we have the downtrend. Of the downtrend. And number three, we have the sideways, or they call it consolidation. You can call it a consolidation. You can also call it a sideways. Or you call it